Liquidity is the most important concept in trading and the main factor for market movements. As long as you can identify where liquidity lies inside of the marketplace, all your job to do as a trader is to either go long or go short in the direction of that liquidity. This is how I've been able to simplify my trading and seeing results like these on a consistent basis because of the framework that I'm going to show you. Watch till the end of this video because how I break it down will really be a game changer for your trading. And make sure you guys are following me on Instagram at Arkhamtrades if you haven't already. Liquidity is essentially prominent highs and prominent lows inside of the marketplace. These are levels where smart money will reach up into or reach down into to stop out retail traders. What do we know about retail books? People trade triangles and patterns, and essentially 90% of the failing traders in the space who doesn't understand this concept. Well, they all put their stop loss at swing highs or swing low points inside of the marketplace. And the algorithm will refer back to these swing high points and swing low points as buy side and sell side liquidity. These are areas where they suspect retail stop losses to be at, and sometimes even trick retail traders to put their stop losses at these specific levels so they can then become liquidity. And the goal of the algorithm is to then take these traders out of the marketplace who places their stop losses at these weak levels and offset their position for smart money to then move the markets in the direction that they want. In this depiction here, we have this buy side liquidity. And as you can see, the market has been going lower and lower and lower until we reach down into this blue lower level. And as we reach down into this blue lower level, we then see a break to the upside. So now the marketplace is going from seeking lower prices to now seeking higher prices. And who are they going to target the most? The traders who went short here, and even all the way up here. If they have not taken profits yet, where are they most likely to put their stop losses? Back above these highs. So the marketplace, seeing that reversal shifting from lower to higher prices, they're going to want to come back above these highs to take those retail traders out who were not able to take profits and use them as liquidity. And here for the sell side liquidity example, we've been making higher and higher and higher prices until we reach up into this red box, which is this ceiling. And as the market then reverses, guess who the markets are going to target next? These traders, and these traders down here. As the market went higher, they're putting their stop losses below this old low, this old low, and this old low. And as the market then reverses, these lows now become liquidity levels for smart money to come back down into and use it as offset liquidity to then move the markets back higher. So to go further, we must understand the basic principles of an auction market. For every buyer, there has to be a seller, and for every seller, there has to be a buyer. So if the smart money, who are these large banks and institutions, are going to move the markets millions and billions of units at a time, they're going to need an influx of trapped traders at a specific level to then offset their positions too. For every retail trader stopped out is another position added to these smart money positions. So their job is to trap the retail crowd in an influxed area. And these retail books and 90% of the garbage out there, which aren't teaching liquidity and giving you all the wrong information, is only making their job to trap you easier. As we can see here, we have these equal highs up here. The retail crowd from the books and courses and lessons, they see this as a double top or a triple top or even a quadruple top even, right? So these books are teaching these retail traders, you see a double top, triple top, quadruple top, you want to go short here, put your stop loss back above these highs. But the algorithm and smart money see these highs as liquidity from the retail crowd, so they're gonna take this side of the market out. So these liquidity traders are now taken out, their stop losses are hit, and then these liquidity pools down here, the retail crowd see this trend line, high, 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 high. We're making equal highs. This is a trend line. It's gonna go higher. After taking out these highs, boom, we come lower and take this crowd out too, that's seeing this uptrend, anticipating this being a trend line. This is also called trend line liquidity. So now we've taken out both sides of the marketplace from these highs on these double tops and triple tops, and also these lows down here from this trend line. So this is how the market can actually trick you to then using you as liquidity to then offset their position and further take the market lower harshly to the downside or even an upside But I'm going to break down liquidity into its simplest form to make sure you don't become a part of that 90%. Let's get into the first lesson. Coming into marketplace here on US 30, the two concepts that we want to pay attention to is what is the current order flow inside of the marketplace and where does liquidity lie. So as we can see, the current order flow inside of the marketplace has been seeking higher and higher prices, and we can obviously identify these highs above us, which are equal highs inside of the marketplace. Retail sees these equal highs as a level of resistance to then go short at. So as retail then goes short, they put their stop loss back above these highs, not knowing that we're currently in an uptrend, further than inducing the retail crowd. And as we see a pullback inside of the marketplace coming into the market opening, we can then take that pullback trade into this liquidity pool, taking advantage of the uninformed crowd. So I'm going to look at this demand level down here in the formation of this bullish order block, and I'm going to anticipate price to reach down into this bullish order block level to then take out this liquidity pool above us, because this is where liquidity lies inside of the marketplace. We're currently in an uptrend, so we're going to take advantage of this information and trade with the smart money. So I'm going to put my RR tool as we enter this order block, stop loss down here, and take a 2-to-1 back above these equal highs, and let's see what happens. Come lower, tap down into that order block level, and then reach up into those equal highs, just like so. Coming into the next day here, the first thing we can identify inside of the marketplace is we can identify that we have been in an overall uptrend. So we've seen that drop lower down into this support level. As soon as we found support, we then seen this reversal to the upside inside of the marketplace. So we've reached down into a support level, found that support. Now we're reaching higher. And where are we now reaching back up into? We're reaching back up into these highs. And why, may you ask, we're reaching back up into these highs? Because there are retail traders who got short at these highs. If they weren't aware that we've shifted from lower to now higher prices, most likely their stop losses are still back above these highs. So there's liquidity up here that the marketplace would most likely want to come up into, take out before then continuing back lower. So my job as a trader now is to identify the most likely areas we're going to find support to then reach up into that liquidity pool. As long as you have the draw on liquidity and where we're going inside the marketplace down packed, your job as a trader becomes much more easier. And as we can see here, we have these last down close candles. We've seen support as we tapped into these last down close candles. Now we're creating these last down close candles. If we can break up here, come back into these last down close candles as a demand level, we can then reach back up into this liquidity pool. We see that push to the upside, breaking above these last down close candles. I'm going to put my RR tool just at the opening, stop loss down here below this low, targeting back above these highs for a 2-to-1. And let's see how it goes. And then we eventually reach all the way back up here into this liquidity pool for that take profit. Just as we mentioned here, we came up higher, taking out those liquidity pools before then eventually reaching lower. The marketplace will seek these liquidity levels to induce and trap these retail traders, offsetting their positions to then take the market where they want to go. As we can see here, we came up higher, took out this liquidity pool, and even this liquidity pool. That's a lot of liquidity up there. So then we see this massive harsh move lower. We can clearly see inside of the marketplace that we have reached a level of support following this break to the upside. Same concept and premise. We're seeing that we're in an uptrend. Order flow inside of the marketplace is high. And what do we have here? We have this high up here. The retail crowd who got short at these highs and did not take profit as it went lower, they're now seen as liquidity, and most likely the marketplace would want to reach up into this level to then take those traders out. So now my job as a trader is complete. I understand where liquidity lies. Now my job is to understand how can I get inside of a trade. So same exact premise. We have these last down close candles forming coming into the New York Open. If we can see a break to the upside, I'd like to take longs inside of these last down close candles, back above these highs, and potentially maybe even reach up into these higher high levels. So let's see what happens next. We get that break to the upside, taking out this high. So if we can get a pullback into this last down close candle, stop loss just down here, I'd like to then take longs potentially back up into this high for a 2-to-1R, and even all the way back up here for a 3-to-1R. Let's see how this then plays out. Price comes back down into that demand level, and then we eventually reach up into this liquidity pool here, as you can see, for that 2-to-1R. Let's take some profits off and see if we can reach up into that third level, and eventually reach up into that third level for that 3-to-1R. So these traders who went short here from this massive move lower, if they did not take profits, they've most likely put their stop losses above these old highs, because retail books are telling them to put their stop losses above these old highs. So as a informed trader, I know that their stop losses above these highs, and we're seeking higher prices. So the algorithm is going to refer back to these areas to then take and capitalize on those retail traders. Coming into the next week here, we can clearly identify that we've established a low down here. We're seeking back above these highs simply because these traders that got short up here, if they have not taken profits yet as the market moves lower, they now become the liquidity for then the smart money to reach up into before continuing to see that push to the downside. So now my job as a trader is basically 90% complete, and now all I have to do is look for a bullish area of demand to then take my longs back above this level. And as we can see here, these last down close candles create that bullish order block. So if the marketplace can come back down into these last down close candles coming into the market opening, I'd like to then take longs back above these highs. I'm going to put my entry just inside of this order block level, stop loss just below the order block for a 2-to-1R back above these highs. And let's see how this then plays out. Price comes down into that bullish order block level, tags us in, creates another order block level right here. Let's say you weren't able to get into this one, it creates another order block level right here, and then we see that strong push to the upside. Very solid. I hope you guys enjoyed the video. If you guys are wanting a more extensive and in-depth lesson on liquidity, you guys can join my Patreon, as well as other benefits like live trading, beginner and advanced lessons, trade models, risk management strategies, pre-market, post-market, as well as daily trade breakdowns, with a community of 100+ active traders. So if you guys are looking for all those benefits, you guys can join my private mentorship, which is patreon.com/tradersasylum, or the first link in the description. I'm Arkham. Be safe.